Hey, good afternoon. Trader Tim, eMoneyMind.com here doing a Monday market analysis video. Not a ton has changed since the trade recap video I put out on Thursday, but wanted to touch on a trade setup from today as well as our liftoff that we had this morning on our gap and go. So anytime looking at a daily chart here that we see the market making new highs or breaking above some sort of channel in a very steep trend line fashion, just meaning that the trend line is shallower here and then we're going to more of a steep rise in the trend line. I start to uh, you know be on the lookout for these exhaustive moves. And an exhaustive move is essentially a handful of gap and go days where we are gapping up and then taking off. Or if this chart was turned upside down, it would be gapping down and selling off big and sort of diving off a cliff. Well, in this case, we're rocketing upwards. And so we had one on Thursday and then again today. Now we are at the negative 23% target. I'm looking at the SPY right here just because I have it's a little bit cleaner with this channel drawn. But if I move over to the ES, the negative 23% targets that we have from the extension as well as the just low to high from the last month or so traded at the 50 and has now gone through the negative 23% target. Anytime we go through a target like that, we've got a secondary target above us, and that's the minus 618, so sort of the next stopping point. So we can do a couple of things. We've come up and gone through the negative 23. We could just move sideways here and put in a bull flag before moving higher. Anytime we consolidate, that's a good point to develop some future support. A move that goes straight up with these gaps, this is why the exhaustive moves end up going straight up and then we come straight back down because there's no support created on the way up. We've got gap and go, gap and go. Price has never traded in this sort of black hole in between. So once we cross into that level, the market can just fall until we reach support where buyers are interested in buying again. And so if we project out by drawing the next retracement, currently the 50% lines up with those prior highs. If we go a little bit higher, it does as well. Even if we could stretch it all the way to this minus 618, and between the 50 and the 618 of this next retracement would put us in the realm of prior highs. So it's not really beneficial at this point to spend a lot of time looking at your portfolio balances when we're getting into these extreme moves higher, because we could just as easily go shooting up here and then come falling right back down. But in the meantime, intraday, these are not situations where I want to be looking for counter trend trades and going short when we are blasting off into new highs on the all-time highs here in the ES. So with that being said, and knowing that market can always go higher, so we could certainly do another, we could spend the whole week trending higher here. I'm really only going to be concerned with longs unless we can break the low from the prior day and show some sign that we're changing, the momentum is shifting. But in the meantime, things are looking good intraday. Now, the other thing that you'll notice is you have a lot of space between where current price is and the trend line back here. When we're moving sideways or when we're just slightly pulling back, that support is much closer. And so some folks might want to be getting in just ahead of that trend line, and it creates a lot more activity on in the sense of slowing down the move. So if we're coming, towards the trend line, there can be early buying, and then there can be buying at the trend line. While here, a move down would likely be very harsh. So sideways is just fine because that builds support, but a move down would likely be pretty quick. Even if it's only to the 50%, it would likely be a quick move because, again, there's no support that has been built. Thinking of it like you can climb the stairs one at a time. You go up, and then the riser, and then the tread, and then the riser, and then the tread. You're taking steps up, and you could take one step back, but you've got the next stair lower, and you can stand on that stair. So you take 4 steps up, and you take 1 step back, and you have support. You have that stair tread underneath you. Versus if you're climbing up a slide and you go shooting up the slide and you're at the top, what are you going to do? You're going to come sliding right back down. So let's talk about today's long setups. Here is the 5-minute chart from the open. Nice, clean. These are the days, Thursday, today, these gap and go days where you can, essentially buy that open and hang on right into the close. Sometimes we even have, like on a day like today, the first 1-minute bar put in the low for the morning, I believe. And there she is. So it's not that often that we get into situations where we're making all-time highs day after day, but there's definitely a lot of opportunities in these times. So let's take a peek. We'll flip this and clear our chart to redraw everything. So the first thing I did was draw the very first low to high in the first couple of minutes here. I don't trade the first 15 minutes, just observing, letting things process. Let me get some anchor points established. We came down. Now this was within a point of the 50%, but we did stop at the opposing short. And this is all happening in the first 15 minutes. So I'm just observing these situations here. And then from there, we did go higher. So you got to figure that, okay, this pullback, to the 50% was bought just ahead of it, a couple of ticks ahead of it, and we ended up going higher. So, okay, let's draw the next one. What happens there? Now we're beyond the first 15-minute mark, so we're in clear territory to start taking some trades. We also were at the 30-minute mark, so I can mark the top of the first 30-minute range, basically the 30-minute high for the morning. So we have that as a reference point. And again, I'm not very interested in taking shorts here because we're in all-time high territory. So we came down to the next 50% retracement long. I drew up this short, or sorry, I drew up this long. And yes, we did break the opposing short, but we were kind of hugging right underneath the top of that first 30-minute range. And so while I wasn't interested in taking shorts, I still want it to be a quality long setup. So I passed on this first long here. But seeing it go to its target, then I just drew the next one. And lo and behold, it lines up nice and cleanly with the top of the first 30-minute range. That's this gray line here that I drew, this gray line. So a 40, 50, 25 was the actual 50%, so just rounded up by a tick. 40, 50, 50. It was maybe 40 minutes after the bell, opening bell. Then from there, I drew up the next retracement like this, trailed my stop below that 61.8, took half off on the first, took half of the contracts off at 3 points. That's what I'm trying to say here. And then from there, so the entry 40, 50, 40, 50, 50. Then I brought my stop up to the 618 of the next setup in the trend. And then from there, I like to switch to trailing swing lows. You could continue to draw the next retracement, But I find that that's when we can get, once we're well away from the entry itself, that's when we can really get going, and the swing lows become, they're really reliable points of change of momentum. So we did have a one candle pullback back here. I choose not to really use those most of the time for swing lows. So I kept it down here below this swing low at 40.56, and then the next one. So then we went higher here. This was a little bit more sustainable, 5 bars of pullback with a little bit of sideways. So we rounded out and then went higher. So I brought it up from 55.50 up to here, a 59. And then the next one up to here, pulled back, went higher, brought it up to a 61.50, and that's where I ended up getting taken out. You can see here, right about there. And then we rolled over and took me out on this push down. So we ended up going higher after that, but the process of trailing those swing lows is going to keep you lock in more gain overall over a course of many trades versus saying, well, here we went up another 5 points, so I should have just kept, what if I just keep my stop way down here? Well, that's great for this trade, but then at the same time, at what point are you going to tighten your stop and lock in the gain? So following a very structured trail stop approach, I find to be much more mentally achievable. More like it's mentally calming because okay, this is how I'm going to manage every single trade. I don't have to use all this mental energy to determine, well, do I want to take it off at the try and get out at the high point, try and trail it, try and do a mix of first targets and second targets and third targets. Just having one exit approach that you can replicate across all of the different trades is much easier to manage over time. So that's how I managed that guy, and then we were closing in on the kind of that 90-minute mark, and we had gone a little bit higher, but didn't really see anything else setting up right at that point. So as we go into tomorrow, I'll be watching for another gap and go day. If the first 30 minutes go by and we can't move above or below it, then there's a good chance we'll just kind of be in a range-bound morning, and that sideways consolidation might be coming into play. And just like we had back here, where we broke above the top of this channel, we could kind of ride the top of the channel a little bit and work our way higher. And in doing so, maybe develop a little bit of support as well. And this is kind of a bull flag as we go straight up here and then kind of flag to the side, but usually the flag is a little more horizontal. So should be an interesting week. If you have questions, drop them in the comments below, and we'll be doing a live trading session tomorrow morning. You can check that out, eminimind.com/VIP. Thanks, and have a great week.